Ever feel like no matter how hard you try, your money just doesn't seem to grow? What if I told you that investing doesn't need to be complicated, and you could start with just a few simple steps that could help you build wealth over time? Stick around, because today, we're diving into smart investment tips for beginners, and how understanding asset allocation can be the key to securing your financial future. Hi there. Welcome to this video on smart investment tips for beginners. If you're someone who's just starting to think about investing, you might be feeling overwhelmed by all the terms, advice, and options out there. But don't worry, you're not alone. In this video, I'll break everything down in a simple way and help you understand how to make your money work for you. We'll talk about asset allocation, what it is, and how you can start investing smartly, even if you're on a budget. So, let's start with the basics. What exactly is asset allocation? In simple terms, asset allocation is the way you divide your money among different types of investments, like stocks, bonds, real estate, and cash. Think of it like a pie. Each slice represents a different type of investment, and together, they make up your whole portfolio. Why is this important? Well, different investments come with different levels of risk and return. Some are riskier but have the potential for higher returns like stocks, while others are safer but offer smaller gains like bonds or cash. The key is to balance these investments in a way that suits your goals and risk tolerance. Why asset allocation matters. Let's take a quick example. Imagine you put all your money into stocks. If the stock market takes a dip, your entire investment could lose value fast. But if you spread your money across different assets, like stocks, bonds, and maybe some real estate or savings, you reduce your risk. That way, if one investment goes down, others might stay steady or even grow. Asset allocation helps you manage risk and ensure that you don't put all your eggs in one basket. This strategy is one of the most important things to understand when you're starting your investment journey. How to start asset allocation, a simple guide. Now, let's talk about how you can start allocating your assets. The first step is to identify your goals. What are you investing for? Are you saving for retirement, buying a house, or just growing your wealth? Your goals will help you decide how much risk you're willing to take. Next, think about your risk tolerance. Are you okay with the idea of your investments fluctuating in value? If you're younger and have more time to recover from any losses, you might choose a riskier portfolio with more stocks. But if you're older, or you need to access your money soon, you might want a safer mix with more bonds or cash. Here's a simple starting point for many beginners. You could try something like 70% in stocks, 20% in bonds, and 10% in cash or a savings account. Stocks offer growth potential, bonds provide stability, and cash gives you a safety net for emergencies. Diversification, the secret to minimizing risk. Another key idea in asset allocation is diversification. This just means spreading your investments across different types of assets to reduce risk. Think of it like building a puzzle. If one piece is missing, it might not look right, but with a few pieces from different places, you get a complete picture. By diversifying, you're not putting all your money into one place, which helps protect you from losing everything if one investment doesn't perform well. For example, you could include a mix of US stocks, international stocks, bonds, and maybe even real estate. As you grow older or your financial situation changes, you'll want to adjust your portfolio. For example, if you're saving for retirement and you're still young, you might want to invest more heavily in stocks. But as you get closer to retirement, you may want to shift toward more bonds and cash to protect your savings from market volatility. It's important to review your asset allocation at least once a year and make adjustments based on your changing goals and risk tolerance. This ensures that you stay on track to meet your financial goals. So, to wrap up, asset allocation is all about finding the right balance between different types of investments to suit your personal goals, risk tolerance, and time horizon. Whether you're just starting out or you've been investing for years, understanding asset allocation and how to diversify can help you minimize risk and build long-term wealth. Remember, investing doesn't have to be complicated. Take it one step at a time, keep learning, and stay patient. Your future self will thank you for the decisions you make today. If you found this video helpful, don't forget to like, subscribe, and share it with your friends who might need a little investment guidance. Thanks for watching, and happy investing.